You just paid off your vehicle. Congratulations, that is awesome. There's no better feeling than not owing money to the bank and you have your awesome vehicle. Congratulations. Here's what happens though. We get phone calls daily, we get phone calls weekly of clients of ours that call and say, hey, I just paid off my vehicle. I no longer have the loan with the bank. Can I now remove full coverage from my insurance policy? So that's the question we are going to address today. If you pay off your vehicle and you don't have a loan, should you remove full coverage from your insurance policy? And the reason we get this question is because most every single bank out there, if they give you a loan on your vehicle, they are going to require you in that contract to carry what people refer to as full coverage, which is comprehensive and collision coverage. And so a lot of people know that, and now that they owe nothing to the bank and that contract is no longer there, they're looking to save a little bit of money and not have full coverage on their vehicle. We're gonna talk about that, and we're gonna give you the question that only you can answer, and by answering that question, you will know if you should keep full coverage on your vehicle or if you should remove it. So here's the first thing that we need to talk about. Even though the bank requires you in the contract to carry full coverage, that is not why you're carrying full coverage on your vehicle. You're not putting coverage on your vehicle to satisfy the bank. Rather, you are putting the correct coverage on your vehicle to protect yourself financially. So that's the first thing to understand. Coverage has nothing to do with the bank. It has everything to do with protecting you financially. And here is the question that we need to ask and only you can answer. And this question has nothing to do with the bank. Are you ready for the question? If something happens to my vehicle, am I financially prepared to replace it or repair it? That's the question. That's it, and that's something that only you can answer. So, as I mentioned, we are not putting full coverage on the vehicle because of the bank. We're putting full coverage on the vehicle to protect your financial situation. Full coverage, or in other words, comprehensive and collision, is protecting your vehicle. So if something happens to your vehicle and there's damage to it, or it needs to be completely replaced, if you do not have comprehensive and collision coverage, well, you're gonna be out of luck. Your insurance company is gonna tell you, hey, I'm sorry that happened to your vehicle, but we are not helping you repair or replace it. Now, if you hear that and you say, it's okay, I have a 1993 Honda Civic, I no longer have a loan on it, it's worth $500. If something happens to it, yes, I have $500 in the bank, I can go out and replace that vehicle. In that case, yes, take full coverage off the vehicle, you're financially prepared to take care of that. On the other hand, if you have a, let's see, it's 2022, let's say you have a 2020 Chevy Tahoe, there we go, and it's still worth $30,000 and you just paid it off really quickly. Okay, if something happens to it and you have to replace or repair it, do you have $30,000 in the bank to easily say, no big deal, I can go out and buy a new one? If your answer to that is yes, then you're good. You can consider removing comprehensive and collision. But if the answer to that is no, I don't want to be on the hook for $30,000 to repair my vehicle if something happens to it, then you need to keep comprehensive and collision coverage on your vehicle. So really, when it comes down to it, it's as simple as that. Just ask yourself that question. If something happens to my vehicle and I have to repair it or replace it, am I financially prepared and willing to do so? If the answer is yes, consider taking full coverage off. If the answer is no, you need to keep it on regardless of what the bank says. The bank is concerned about their financial interest, not yours. So you need to be concerned about your financial interest, not the bank's. I hope this video helps. If you have any questions, you can always leave them down below in the comments and I will respond. Thanks for watching, and we'll see you in the next video.